In this video, I'm going to teach you guys how to read the chart, analyze the market, and come up with a setup in less than 7 minutes. The first thing you want to take note of is that you must be working with three time frame. Yes, and this time frame are your higher time frame, intermediate time frame, and your lower time frame. Now, depending on your trading style you choose, this time frame is going to vary. This is actually a sheet of different trading style and the time frame that correspond with it. So I want you to take note of, screenshot it, and take note of it. So for this example, it's actually a swing setup. So we are working with the 1 hour, 4 hours, and daily time frame. The 1 hour time frame is our lower time frame. The 4 hour time frame is our intermediate time frame, and our higher time frame is the daily time frame. Right. So the first thing we want to do is to go to our higher time frame, which is the daily time frame. And what are we looking for? We are trying to determine the directional bias. We want to determine, is it going to make sense to be taking bullish setup or bearish setup? That's what directional bias gives you. Now, to determine this, I try to make it very easy, right? This is a very easy approach that you can actually use to determine it. Now, you want to look back in the last 50 candles or 50 bars and try to see, is there, are there more of bullish candles than bearish candles? And are the bullish candles more aggressive than the bearish candles? If yes, then the trend is bullish. Simple as that. And without even doing this, you can clearly see that the trend is bullish. So we have identified our directional bias, which is bullish. And what does this give us? It lets us know that taking bullish setup will make more sense. Not like if you cannot take a bearish setup, but it will make more sense taking setups that are bullish. Now, the next thing we want to do is to go to our intermediate time frame, which is our 4 hour time frame. And here, what we are looking for is valid point of interest. Now, what do I classify as a valid point of interest? Basically, I mainly trade one key level, which is demand and supply zones or order block. And for me to take that order block, it must have a couple of criteria. And one of that criteria is that the order block must actually break structure, right? So the order block I want to take, which is my point of interest, must actually break structure or form a market structure shift, right? It must break structure, and there should be structural liquidity close to that other block that price is going to take out to tap into that other block, right? So before it expand higher, and also it must sweep liquidity. Sorry for this. There must be some form of liquidity sweep, right? So this is what I'm looking for before I mark this other block as my entry. Before I mark this other block as my point of interest. So once again, what are the rules? We want to see liquidity sweep, then a break of structure, then structural liquidity that is going to get induced for price to mitigate the other block. Then that is at that point. So if these three criteria meet, that is my point of interest. So now, as you can see over this place, you can see that we actually have this criteria. We have this other block that we can mark out. This is the other block I'm interested in, right? So why am I interested in this other block? Because of it meets our criteria, which is one, liquidity sweep. Two, it have some form of structural liquidity that price is going to take out to tap into it, and it actually breaks structure at this place. It actually breaks structure at this place. So at this point, I'm expecting price to retrace to this point and expand higher, right? So I have marked out my valid point of interest. Now I'm now waiting for price to tap into this valid point of interest. And this is actually my protected low, right? I'm expecting this low to stay protected, right? Not to get violated. Otherwise, my analysis is wrong and I need to analyze the market. Right. So at this point, this is what I'm going to be waiting for on the intermediate time frame. Now, once price reach enter this my key level, I'm going to go down to my 1 hour, my lower time frame, which is the 1 hour time frame. Then what am I looking for on this my 1 hour time frame? I'm looking for my entry model. And what is my entry model? Now you can have different entry models. There's a lot of entry model. We have ICT ICT box model. We have 2022 model. There's just a lot of model, right? But what I'm actually looking for is something like this entry pattern. I'm looking for, I want price to sweep liquidity. Let's get rid of this. So I'm looking for a liquidity sweep, then price tap into the key level, Then I want to see price break structure, form a second break of structure. Then I'm going to take my entry at this point and expect price to continue to this place. Now, this is going to serve as a structural liquidity or an inducement, right? So for price to trade to this place. Then I can decide to take my listen, I'm going to take the other block that failed. This is actually called QMR, right? The other block that failed, the other block that liquidity was swept, it failed. I'm going to take it as my entry, and I'll put my entry at this point, put my TP at this one, and I'll decide to target either a fixed 3 hour or all the way up to the external range liquidity because price is intended to go to that place. Right now, this can actually occur in two ways, right? This entry model can occur in two ways. It can also occur like this. Let's try to duplicate this thing. It can also occur like this. We can actually have price forming the structural liquidity before the break of structure at this point. Before the break of structure at this point. It's still the same thing. The most important criteria that must meet is that one, we want to see that it swept liquidity, that's one. Two, it breaks structure, that's two. Three, there's actually a structural liquidity that's going to get taken out. It can be this one, it can be in form of this one. And four, we want to see that it's occurring in our high probability point of intermediate time frame point of interest. So that's it, and you just take your entry. So what am I waiting for this setup? I'm waiting for price to just trade to this place, give me this entry, and I'm going to take it. So I hope you guys understand this whole logic. And if you guys understand it, as always, like the video, subscribe to the channel. Also check out our free Telegram channel for more setups. And I will see you guys around.